Welcome back, guys and gals. Greg Silverman here, Chief Investment Officer. This is a Come Learn With Me series where we curate various articles that get a lot of shares and likes on our social media platforms, and then we read them together in a bit of a Come Learn With Me fashion. This one in particular revolves around gold and silver, which is one of our mini group themes. What's that? That is, we track a number of themes for investment purposes. You can see which ones we track by taking a look at some of the links below. All right, without further ado, let's read this particular article. Gold investment weaker since 2015, price lows. And this is from Friday. Oh, let's see what they're talking about. Gold investing shrank last year, 2021. Selling from gold ETFs cut investing 43%. All right. Gold investing shrank last year to its lowest level by weight since the precious metals bear market low of 2015, according to new data today. Excuse me. Figures compiled by specialist Metal Focus and published by the World Gold Council show heavy selling by shareholders in gold-backed ETF trust funds more than offset a jump in small bar and coin demand among retail investors. Interesting. Not what I would have expected. With the shock of the global COVID pandemic and lockdowns easing in 21, demand for gold in the consumer-driven jewelry and technology sectors recovered throughout the year in line with economic growth and sentiment, says the Mining Industry Backed Council, while central bank buying also far outpaced that of 2020. But investment demand was mixed as high inflation competed with rising yields for investors' attention. I'm not sure I understand really what drives the gold price, to be dead honest with you. It seems to change. Maybe it's fear. Gold investing demand fell across 21 as a whole to a little more than 1,000 tons of bullion, the WGC's new fourth quarter data said. That marks the smallest quantity of visible gold investment demand on the Council's current data series since 2015, the year that gold prices bottomed as the US Federal Reserve discussed and then finally raised interest rates. Following the global financial crisis, with the steepest drop since 2013, down 43.2% from 2020's COVID record total of more than 1,750 tons. Within the 2021 total, small bar and coin demand jumped by almost a third, reaching its largest total since 2013's price crash. But as a group, shareholders in gold ETFs worldwide last year liquidated almost a fifth of 2020's record-heavy inflows, reducing the quantity of bullion needed to back those products' value by 173 tons. Come on. North America trust funds, led by giant GLD, traded in New York, shrank by 199 tons. UK and Eurozone funds were virtually unchanged, and Asian-listed ETFs expanded by 25 tons. 2013's massive outflows from gold ETFs, spurred by the Fed discussing and then finally starting to taper its monthly increase in QE bond holdings after the financial crisis, saw bullion's annual average price in dollars sink by 15.4% last year. In contrast, saw gold set a fresh annual record, edging 1.6% above 2020 COVID's crisis level. Was that $2,000 yet? I'm not sure. The US Fed is now tapering its COVID QE with a view to ending new bond purchases in March, when it also now looks certain to raise overnight interest rates from 0% as well. But monetary policy today is so historically accommodative, says Bullion Bank HSBC's precious metal analyst James Steele, and even the 2022 rate raises now widely expected from the US Federal Reserve will leave real interest rates profoundly negative versus inflation and the cost of living. Risk of a steep stock market correction, most especially if the Fed pushes ahead with tighter policy in the face of equities falling, also means gold could be used as a safe haven by investment portfolio managers, Still added Thursday, speaking on a webinar for members of the trade body, the London Bullion Market Association. Looking ahead at 2022 investing inflows, we see a division in gold demand worldwide. Still went on explaining that inflation tends to motivate investors in Asia more than in Western markets. Okay, well, there you have it. Being a gold bug is never easy. Well, I hope you enjoyed that one. Take a look at some of our links below and subscribe and like. Join us again soon for another Come Learn With Me session. Greg Silverman for this week, out for now.